Do you like sweeping? Well, so does the market. In this video, I'm gonna break down everything you need to know about liquidity sweeps. Liquidity sweeps are key to my trading style, okay? I trade the volume profile. I'm an auction market theory trader. That's a very broad term. So what I'm gonna do is actually break down the concept of liquidity sweep for you. So if you're new to this concept, if you're new to trading, you're going to want to lock in on this video. Have your charts ready, be ready to take some notes. We're gonna go through some real examples on the charts, okay? This isn't gonna be theoretical. I'm gonna use the replay tool in TradingView to show you exactly what this looks like. If you're new here, my name is Forrest. I've been trading for around 8 or 9 years now. I can't keep track. A 7-figure trader. I've made a lot of money. I've lost a lot of money. Go check out a lot of my old videos. I trade futures. I trade options in equities and indices. So I have a ton of experience all around the market, things like that. I also have played around with prop firms. Okay, I'm the face of My Funded Futures. Go check out their channel. They are my #1 recommended prop firm if you want to use the prop firm game in order to jumpstart some capital into your own accounts. Ton of disclaimers. Oh, there's one more. I have a course that I finally released. The link is down below. You go to tradingwithforrest.com Masterclass, which reviews everything that I know. There are over 40 videos in there, and we're adding more content to it every week, actually, giving you everything that we know about how to trade. All right, so here we are in TradingView. A few things first and foremost. If you haven't used TradingView, it's a free tool. You might not be able to get yours to look exactly like mine if you don't pay for the premium version, so keep that in mind. I do pay for premium. It gives you more layouts, things like that. So I have access to all these layouts. That's fine, guys. You don't necessarily need all of that for this material right here. So today's lesson, let's talk about liquidity sweeps. Let's talk about what is on the screen. There's a few key things here. Okay, I'll remove the volume profile on the right. So there's this indicator called the visible range volume profile. Let me actually just remove it in total. I'll show you how I set it up exactly right now. So go to indicators and type in visible range volume profile. It's gonna pop up something like this. We can configure it. Okay, right now it's showing us the cumulative delta on up versus down volume. That doesn't really matter, okay? If those words don't mean anything to you, it doesn't really matter for the way that I use it. We're gonna explain it thoroughly. So what I'm gonna do here is hover over the indicator, go to the settings, hover over that. Over inputs, change the row size to 100. Under style, you can see that there's some things here. On the up volume, go to the fourth color from the right, gray. Down volume, fourth color from the left, gray. Value up, same thing, same thing. This POC box is gonna be checked. We don't need the point of control on this visible range volume profile. You can also, uncheck these if you want, doesn't really matter. Okay, so what is this? This is a version of the anchored volume profile. All volume profiles are anchored, okay? The indicator that you use is just going to automatically anchor it around some points for you or not. So this is anchored. It's calculating the volume profile for everything that's on my screen. Okay, this is the one that I like to use. There is another one that my partner in crime, Soul, likes to use, which is called the anchored volume profile. Okay, there's a few different anchored volume profiles. What those will do is you can choose the point, right? So if I wanted to do a volume profile from here to here, I could do that with the anchored VP. If I want to do that with the visible range, all I would need to do is just zoom into that point in time, right? Or I could use the replay tool and go back. So volume profile shows us the volume at each price. What do I mean by that? Okay, we can see that there's a peak right here. So if I had a question of how much volume, okay, is in the price range of 59.37, let's get rid of these lines. How much volume is in the price range of 59.37 to 59.89, right? Everything in this red box. We can see here that there's quite a bit of volume here shown on the right side of the screen. The reason why we need the volume like this, right, showing me the volume at these prices, is that this volume down here at the bottom of the screen does not show that for us, okay? So this shows us the volume at these prices. Why does this matter for liquidity sweeps? This isn't a volume profile lesson. It matters a lot as an auction market theory trader because the reason that liquidity gets swept is because the market is comprised of everybody playing this one game, okay? And just like you, when you get into a trade, everyone's emotional. We like to think that investors with millions of dollars or these companies with millions of dollars are immune to emotional response. That's just not the case. at all, right? Sometimes it could be even worsened, right? Companies who have made a lot of money doing one thing or heavily invested in a singular thing, right, are going to be maybe even more so overly reactive to changes in the underlying price of that thing. What's an example of a company that might overreact or react at all to the price of a thing? Okay, MicroStrategy. MicroStrategy buys Bitcoin. Okay, their entire company, their business is just using leverage to buy Bitcoin. That's really all that they do at this point in time, okay? So they're going to be overreactive or reactive to any fundamental change in Bitcoin, more so than a company who maybe only has 1% of their portfolio in Bitcoin. Makes sense, right? So companies aren't immune to this by any means. So the prices where people are positioned are really, really critical. So we'll let the visible range load again. So this chunk here, we know that there are a lot of people in these prices. We know that there are a lot of people down here in these prices. So if we go back in time a little bit, okay, let's hit our replay, go to here. Let's let the visible range load, and it doesn't work for historical data for some reason. So let's go to the 24-hour chart. You can get to that just by typing. You don't have to select anything, just type in 24 and then H, and that'll give you hours, or you can do 24 minutes. It's gonna be 20, or that's months, sorry. 24 without anything gives you minutes. 24 M will give you months, but you can't do that. In any case, 24 hours right here. All right, so at this point in time, how can we use the concept of a liquidity sweep to help us determine what is most likely to happen from here? Or we can even go back another bar. Okay, so we have this nice trend line that we rejected off of on the daily. Again, we're on the 24-hour chart. Got my sim trade open. I want to take a trade here. Okay, so let's say I go short. Boom, I'm short right here. What makes sense for a short target? Now, if you're scared, right, if you're looking too tight on the chart, if you're zoomed in, you're gonna be looking for something around like 59. Let me get rid of these other time frames. Hold on, guys. Because quick note, so if you have multiple time frames open on replay, it's gonna replay the lowest time frame. I don't wanna do that right now. I just wanna do the one time frame. So let me get rid of replay mode. Let's go back into replay on the daily. All right, there we go. So I wanna go short and I wanna pick a price target. Now, there's this chunk of liquidity here and a chunk of liquidity here. For us to sweep a level, right, the next key pivot for us to sweep would be down here. Now, there's a few very obvious things that might be going off your brain, maybe not if you're a newbie trader. You're saying, first and foremost, the last time we came down, okay, we didn't cross this level here, 59.65. We actually didn't cross that level. We put in a higher low, which is fine. Okay, we put in a higher low. That is important and it's of note, right? Because we want to always be looking for patterns and understand, is this pattern going to repeat itself? If you are a liquidity sweep trader, right, I want to have some anticipation about the future. Yes, we did this higher low, but in general, because we rejected this high, either this area needs to get swept or this area needs to get swept. Okay, both of those are prices that could get swept. What do I mean by sweep? A sweep in my book, a sweep means that we run through the price and then come back, okay? So the reason that we can do this or really wait to take trades till it does this is that it gives us really, really good setups. Let me show you what I mean, okay? And this last Friday is gonna be a really good example. So I could take this short and I want my price target to be down here at 58.75. So I could put a limit buy down here, maybe on the sim trade. It's not gonna let me, but we'll just hold this down until we get to 58.77. So we go short right here. I'm going to expect it to sweep this price. And the reason I'm gonna expect it to sweep this price is a few reasons. One, there's a huge block of liquidity here. So we know that there's a ton of participation here. Each one of these nodes acts as a magnet, right? So we're gonna come through, all of these people are going to suck us into this price. We also have this, we can't ignore our technicals, right? We have this shape going on right here, right? It looks like we have a wedge, this wedging shape forming really on the daily here, right? Every single one of these is an entire day. So as I expect us to traverse down because we rejected this trend line, okay? And I need a price target. I'm gonna actually hold short until we run through this low right here, 58.74. Okay, let's see how long it takes for us to get there. Boom, all right, got an award. And where did we come to? to this next block of liquidity. And you're gonna see the market do this a lot. Even though it's printing these shapes, right? You can see here that even though we front ran the low last time, the market needs to go to liquidity. So we came to this next block of liquidity. Now, what might I wanna do here? I could probably take a long right here. And if you're asking where should I long to, well, you're probably going to hold along up till at least 59.27 again, or this shape completes. So you can use a combination of your technicals with the volume profile to trade. But what you want to do for the A trades, okay, for A trades, right, the best setups, that's what I mean, okay, by this. The best setups include sweeps, okay? That means that these trades, like this prior bounce here, is harder to see because it didn't do a sweep here. Without a sweep, there's always the risk that it sweeps. That's something that you need to burn in your mind. When the market doesn't sweep liquidity, there's always a risk that it sweeps. And we see this the most when people don't pay attention to both NQ and ES, right? NQ and ES are very, very similar in terms of their patterns, right? I always watch the volume profile on both of them. Sometimes one or the other will make a sweep and the other one won't. And especially when ES has not swept a level yet. If NQ comes down, sweeps a level, and ES has not swept that level, what will happen is people will take a trade early and they'll get screwed because ES has not made a sweep, okay? So perfect example here, if you longed here looking for all-time highs, right? Well, we can see here that this liquidity has still not been swept. And so we swept this and we swept this. Now this liquidity has been swept. So at this point in time, I would be much more keen to take a long. Now, this is the current bar here as of Friday, but this is a real long that I might want to take looking for higher. We also did, throwing in a bunch of other technicals here, we have this double doji pattern. By the way, this is some freebie for you in this video. This double doji continuation is something that we've seen many times. I've actually done an entire video on this double doji continuation pattern in the past. It's actually, we can see a double doji right here, actually on the daily as well, right? Double doji continuation on the daily. It's a great pattern to look for when you have kind of this big engulfing bar, okay? That double doji continuation. So there were a lot of things in play here, but when you're looking for targets and you're looking for trades, you want to look for these sweeps through blocks right into the edge of a shelf. So what do I mean by a shelf? Let's get this sim trade off of my chart here. Close it. Okay, cool. So what do I mean by a shelf? So these nodes here are like peaks and valleys, right? And so we traversed this node, right? We went through all of these people. Remember, these are people who are positioned here. It's not just an arbitrary peak, okay? This set of prices has more people positioned than this set of prices, right? Almost twice as many people are positioned here than here. It's really, really important. So there's a lot of participation, and what'll happen is you're almost always likely to traverse these nodes and then run into the next one. So you'll notice that we hit this node, we hit the peak of it, right here, and we didn't traverse it, okay? So when I'm using the volume profile with all the other tools in my tool belt, like just some simple pattern recognition, I can't do a whole section on technicals here. Technicals to me is just very simple pattern recognition. We're putting in lower highs, okay, off the daily. There was some weakness here, literally lower highs. And look at this obvious kind of range that's forming. It's a very obvious range. You can expect it to continue this shape here, this wedge that's forming on the daily. And if we really zoom out and look at what's under these lows, there's this node here. There's this node of support here at these lows, right? There's this node of participation, people who are positioned here. This isn't magic, okay? These are people who are positioned here, who are in, again, going back to that emotional response, people are going to react the most according to extreme changes in the underlying according to their position. So the market's going to react the most at these edges once we've swept liquidity and hit large blocks where there is participation. Why? Because all of these nodes and these sweeps are the locations where people are going to be in maximum pain or maximum profit every time. It just makes sense, right? Because we went past, right? If somebody longed here, right? Somebody longed right here, okay? They've been green, now they are in pain, okay? They are in pain right here. If somebody longed right here, they're also in pain, okay? If somebody shorted here, okay, now they are in profit, right? And you have to imagine it for all three of those primary scenarios, right? Long, or short, off of these key pivots here, this is going to make sense for a bunch of participation to rush in. People are either racing to get out, they're racing to get out first, or they're gonna get out break even or take a loss, or they're anticipating a possible reversal due to market structure while they're at the most amount of profit in this market cycle. It just makes sense. Now, this works across multiple time frames, okay? So you have to realize, obviously, all of this interaction is happening within liquidity, not just on the daily. It's also happening on the 5-minute, the 15-minute, the 30-minute. So I'm not gonna say it's obvious. The way that you should do this is higher time frame. Higher time frame, higher time frame, higher time frame. Higher time frames are going to take precedence over lower time frame narratives. So don't get faked out by over analyzing the volume profile on the 1 minute. Yes, you can use it and see those interactions, but you're going to see price action break down on the lowers a lot more than the highers because of the energy that comes in based off of the higher time frame analysis. So in summary, a liquidity sweep is when the market moves through an edge, right? It goes through. We swept both of these lows, okay? Both of these lows are swept, and we hit this block here, this block of participation, right? So now it would make sense to look for a long here. Obviously, you could take a long here based off of the high volume bottom wick. This was also a doji, but these are just lower quality versus taking a sweep long. Or the inverse is using them for exits on your trades, right? If you shorted this, all right, this was a great short to take. Using the sweep as your price target on an exit just makes a lot of sense, okay? So that's what a liquidity sweep is. You can use these intraday. We use these intraday a lot on the lower time frames, okay? 15-minute, we'll add in my session volume profile. This is gonna give us a session volume profile for a session. And what we do, and what I teach traders, is to look for prior day, overnight low and high, and prior day high and low, okay? So here's a quick example. We have the overnight kind of POC here, and look what the market did before it went lower. We swept this price, okay? This overnight auction that happened, right? We went, got the last man, right? Running through the price means that we've cleaned up all the participation within this block of time. All of these people have been cleaned up, right? Their opportunity to play the game and take action on their positions, okay? And then we run through that entire auction, okay? You'll see that day, every single day, you'll see these sweeps around overnight high and low, prior day high and low. That's today's video on liquidity sweeps. Use this, mark key levels, right? Look for these sweeps, prior day high and low, overnight high and low. And then on the higher time frames, which is even more important, when you're planning your trades, look for and expect these node traversals to confluence with the sweep. This is really key to your trading. Try it out and journal this. If you're looking for a place to learn more, join our Discord, Trade Edge, link is down below. And of course, you can sign up for my masterclass, which is available at tradingwithforrest.com/masterclass. Let's all kill it in 2025. See you in the next video. Peace.